This is the Stock Market Daily News podcast for Friday, April 12th, 2026. I'm your host, bringing you yesterday's biggest market moves and the headlines every investor needs to know. So, how did the market do on Thursday? All three major indexes closed sharply lower as tech and software names faced a rout. The S&P 500 dropped nearly 2%, the Dow Jones fell 1.6%, and the Nasdaq tumbled over 2.3%, one of its toughest days this year. The fear? New risks from artificial intelligence technology shaking confidence in some of Wall Street's favorite growth stocks. Coming up, a dramatic downturn in software and SaaS names triggered by AI fears, a closer look at how much you really need invested for dividend income, and why CEOs were summoned to Washington for an emergency meeting. Let's dive in. Story 1. U.S. software and cybersecurity stocks got hammered after news broke about Anthropic's new AI model, Mythos, which is reportedly powerful enough to find vulnerabilities that have gone undetected for decades. Cloudflare sank over 6% to around $94, CrowdStrike dropped about 5% to $331, and Zscaler plummeted nearly 9%. The broader SaaS sector lost roughly $2 trillion in value over the past year, as investors worried these companies' core business models and enterprise contracts could be upended by rapidly advancing AI. Lesson for investors: disruption risk is now front and center for tech portfolios. Story 2. In response to these AI breakthroughs, Treasury Secretary Bessent and Fed Chair Powell called the CEOs of top banks to an unannounced emergency summit. Their worry: AI could compromise digital financial infrastructure at scale. With cybersecurity defenses suddenly appearing fragile, financial sector leaders are quickly reassessing their technology stacks. For investors, this is a powerful reminder: systemic tech risks can become market risks overnight. Story 3. The sell-off spread beyond the software sector to blue-chip tech names. Adobe slumped almost 4% to around $490, Salesforce fell close to 5%, and even Workday declined more than 3%. High-profile tech winners of recent years suddenly looked vulnerable. Portfolio takeaway: don't assume yesterday's leaders are immune to seismic tech shifts. Story 4. On the dividend front, new analysis shows retiring on dividends alone isn't as simple as picking a high yield. For instance, generating $100,000 per year at a safe 3.5% yield means you'd need nearly $2.9 million invested. Grabbing riskier 8% yields might only require $1.25 million, but that comes with principal erosion and higher income volatility. Always weigh yield, total return, and your real spending needs before chasing payouts. Story 5. As the U.S. tech slide deepened, European markets echoed the fears, with German software giant SAP and Capgemini both dropping sharply. The global reaction highlights investor anxieties that AI disruption isn't just a U.S. story, but potentially a global reset for digital business. Let's quickly recap. The S&P 500 closed at 4,940, down nearly 2%. The Dow ended at 37,624, and the Nasdaq finished at just under 15,300, losing 2.3%. Key themes: rapid AI disruption, rising systemic risk, and a reminder that today's tech darlings can quickly turn volatile. Looking ahead, watch for upcoming earnings from major banks, new inflation data midweek, and signals on how regulators might respond to fast-moving AI risks. Don't miss tomorrow's episode for the latest trends in market volatility and sector rotation. Subscribe now, follow us, and visit our website for daily updates. Thanks for listening. Let's keep you ahead of the markets.